this and more. We're now joined by Jignanshu Gaur, who joins us on the show. Hi, Jignanshu. Good morning. Good to see you, Ben. I believe you're leaning towards the bullish side. Tell us the rationale. You believe that the company is in a transformational period right now. Tell us more.
Thank you. Thank you so much. It's always a pleasure to be here. I am on the bull side of the case, as we saw Mangalam say that the result had everything for everyone. My rationale is it is a transformational phase where they need to fight off the competition from quick commerce, which at 6.8% LFL is a decent job of their core business holding up well. Second, they've realized that F22, 23, 24 network growth was under what they should have done. And hence their own investment into employees, into new stores, is the transition phase that they are going through. If we see just on store growth, they have spent 3.5, almost 4,000 crores in the last 3 years. And the capex for H1 itself, again, was another 1,500, 1,600 crores. That bodes well for accelerated network expansion. I think the competition pressure will ease out as we move towards the next few quarters, and so will the cost pressure. Because and that's the reason for the bullishness for us.
Jignanshu, so according to you, what is the valuation now? Avenue Supermart is trading at 70, 75 forward. What's the number?
Yes, it's around 70, 75 forward. I think there is a difference in how people value it because there is almost a 10% delta on standalone versus consolidated. So the way I like to think of the valuation is you do it on standalone and then think of what valuation you want to give for DMart ready business.
So how do you justify a valuation of 70, 75 times? Because growth has been moderating. And plus investors also have an option to play, say, an Eternal or Swiggy, where the growth rates are a lot higher.
Yes, so I think it's a choice that investors have of playing a business model which is solid, which has potential for growth, but... Hello?
Yes, we can hear you. Go ahead, Jignanshu.
Sorry. It's a solid business model which has potential for growth, and it's about replication, where their margin profile is at the bottom, versus a business where a lot of the expectations in the pricing are already built in. How do I justify valuations? Is imagining a scenario even in 2030, do we expect the entire modern trade business to go out and everything be replaced by e-commerce, or do we feel that there is a space for modern trade as well? So I feel it's coexistence rather than a question of existence. So I think the growth, when the margin profile comes back and the operating leverage comes back, the PAT growth will exceed expectations, which is where our delta versus consensus numbers also exists. It's not on growth, not on valuations, it's on margins.
Okay, all right, Jignanshu, we appreciate you joining in and giving us your take on the sector. We look forward to having a longer chat with you, but we've taken your point on board that for Avenue Supermarts particularly, it's in a transformational phase and you continue to remain bullish on the stock.
He said margins will also, I think, have bottomed out.
Yes.